Freetrade has been sold. Let's dive into this news and talk about who has acquired them and what this might mean for Freetrade and its customers going forward. And this is a much bigger story than it might seem on the surface, not just for Freetrade users, but also for regular, everyday investors. There are some pretty interesting developments that have arisen from this. A lot of people feel like they've been screwed over and that they've lost out on some big money. So, Freetrade has been acquired for £160 million by IG Group Holdings, more commonly just known as IG. The IG without all the filters and random people sliding into your DMs asking you to send bobs. IG's announcement of this acquisition says this will strengthen their UK trading and investments offering and provide access to new customer segments and capabilities. It will broaden our target addressable market that will accelerate our growth and delivery of new products and features on our award-winning platform. Freetrade's founder and CEO adds, IG's vision for Freetrade is closely aligned with our own, and its backing will be of huge benefit as we continue to scale the business. This part is particularly interesting. Freetrade's vision is closely aligned with IG's. We'll come back to this because we'll have a bit of speculation with regards to where this could mean Freetrade goes next. But first, why did IG buy Freetrade? As a neutral outsider, it kind of seems like Freetrade have been on the decline. Again, there will be some speculation in this video. Do not take anything I say as fact except for what we know from this press release or other sources linked in the description or screenshots that have been included. But if we think back a few years ago, before Freetrade introduced fees compared to now, it seems like they're not exactly the en vogue brand they once were. Google Trends seems to back this up. People search for them a lot less than they once did, with search demand peaking in 2021. Yes, there was a big peak of investor demand during lockdown, but if we compare with Trading 212, for example, we can see how they went on to basically grow again after the pandemic wave dropped off. Well, the UK investment market is on the rise. According to IG, the UK direct investing market has grown at 10% compounded annually and is forecast to grow strongly too. This is based on data from 2018 to 2023. As someone that has a deep passion for trying to help people in the UK build wealth, this is great to see. And the press release claims that Freetrade had a customer retention rate of 93% in 2024, with assets under administration, or AUA, rising by £1.2 billion since the end of 2022. That seems surprising. Despite demand dropping off, and an industry source that we've spoken with has said that a good number of customers have transferred away from Freetrade, Freetrade have apparently continued to hold on to clients and their AUA has grown, though growth in the stock market in recent years will have delivered a good chunk of this rather than gaining it all via acquiring new customers. Freetrade's revenue grew to £27.5 million in 2024, including a record performance in Q4. Also interesting is the report detailing Freetrade's revenue breakdown, claiming that the £27.5 million they earned came from well-diversified revenue split across subscriptions. For those that don't know, you have to pay a minimum of £59.88 in subscription fees to access an ISA, or £119.88 per year to access a SIP. There's also foreign exchange fees. Their FX fees are definitely on the higher side, around 1% on the free plan, and even 0.39% on their top tier price subscription, their plus plan. And they also generate revenue from their interest income, the money they're making simply by holding your money. However, there's more to this. IG has purchased Freetrade for £160 million. And this is a press release on IG's website. They're going to try to big up the purchase a little bit, aren't they? The reality, in my opinion, is that things aren't perhaps as rosy as they may seem, and there are a few reasons for this. Firstly, with Freetrade's revenue of £27.5 million, this acquisition price is just a 5.8 times multiple. Pretty low according to our industry source, with typical acquisitions often being in the 10 to 12 times range. And, as an example, Nutmeg was acquired by JP Morgan in 2021 when they were making quite substantial losses and had turnover of £21.6 million, very close to Freetrade's revenue, yet they were purchased for a reported figure of £700 million. This was over a 32 times multiple, although came during that period of rapid growth in the pandemic boom, but it was nearly 4.4 times the fee that Freetrade has been acquired for, if the JP Morgan Nutmeg figure is accurate. It's no surprise that IG would shout about the acquisition, both to look good and generate good press, but also because they arguably got a good price. But that begs the question, if Freetrade were doing so well, why would IG get such a good price? And £160 million is still a lot of money, presumably money that IG would like to recoup. So how are they going to do that considering Freetrade isn't a profitable business and considering they expect to achieve a return in 3 to 5 years, according to the press release? Well, Speculation time again. They could increase fees. In their stocks and shares ISA, IG charge a quarterly fee of £24 or £96 per year, which is higher than Freetrade's subscription price, though you can actually get around this with a monthly trade, and this brings your total fees down to £3 a month or £36 a year, which is cheaper than Freetrade. So, what's more likely? Well, in my opinion, IG is a platform that makes most of its money from CFDs, so it's therefore logical to think that Freetrade could either start to offer CFDs themselves, or they might try to tempt people over from Freetrade to IG to start using CFDs there. We know from the press release that the two brands aren't merging and will stay as commercially standalone businesses. If this happens, and it is a big if, this would be a huge switch for Freetrade, who have vocally opposed CFDs in the past, even going as far as to call them hazardous to your wealth in this blog post from 2017. And for what it's worth, we agree. CFDs are glorified gambling, in our opinion, and most people will lose money trading them. This is just a fact, and is something that is backed up by the Financial Conduct Authority. I'm not going to dive too deep into this because it's pure speculation on my part. Freetrade might not offer CFDs, but I wanted to touch on it because of what I said I'd come back to earlier. The fact that IG and Freetrade claim their visions are closely aligned. Considering Freetrade have been anti-CFD in the past and do not offer them currently, and IG do offer CFDs and make a lot of their revenue from them, and Freetrade don't make any profit, but IG want to get a return on their acquisition relatively quickly, something doesn't quite add up here. Freetrade's CEO also surprisingly stepped down around half a year ago, and these acquisitions can take some time to iron out, so yeah, speculation. But this isn't the only thing that people feel doesn't add up. Freetrade raised money at a valuation of £650 million in 2021. They actually raised this money from retail investors, average Joes like you and me. They then raised money again in 2023, this time at a significantly reduced valuation of £225 million, a 65% decrease based on the price people invested at just a couple of years previous. And now, 18 months on, they've sold for a further reduction of over 25%. A lot of Freetrade users are also Freetrade investors, people that not only put their money onto Freetrade to buy shares, but people who also put their money into Freetrade, buying shares in the company itself, which might explain why they remained loyal when a lot of other retail investors were switching to other platforms, again based on what an industry source has told us. If you invested in Freetrade in 2021, then you would now be down around 80% of your money, and that's before ownership dilution. This 80% or greater loss of money is forced. All shares have been purchased by IG, meaning all investors have now been bought out, and for those that invested, your loss is confirmed and there's basically nothing you can do about it. And not only this, the bigger players that were allowed to invest, diluting the ownership of some retail investors, were given preferential treatment. Freetrade investors, people that have been their loyal fans for years, described as tribal by a Freetrade investor we spoke with, are incredibly angry and disappointed, with some even looking to see if legal action is possible. A, ordinary shares, and B, investment shares, the types of shares that average Joes got via Crowdcube, will be bought out at a price of £1.19 per share. But Series B1 shares will get £2.8 per share, nearly twice as much. Series B3 will receive £2.60, way over double the amount that everyday people that trusted and believed in Freetrade are getting. VC investors and owners of the company are getting a much better deal. It is worth noting that during at least one of the institutional investment rounds, Freetrade investors had the option to sell at just over £3 per share, so some investors, not all, had the chance to sell for a higher amount than they have now been forced to take. But it also makes sense to see why people would want to hold on to that investment. They liked the company, and they were just receiving an influx of investment. It's easy to believe a company was going places when this happens. And the last Crowdcube round cost investors around £9 per share, so perhaps it wouldn't seem a great deal at the time, even if it looks like one in hindsight now. I spoke with Damien of Damien Talks Money about this, and also spoke with a Freetrade investor. I'm going to include their thoughts now to wrap this video up. Please note the investor wished to remain anonymous, so we have changed their voice.
Freetrade's sporadic valuations over time were a result of them raising money. So they were going out to the market and saying, we need to raise cash to keep our business operations going. A lot of that money was raised through their fans, basically. So from people who liked the brand, who wanted to buy into it, from their customers. So the top valuation, I think, was 650 million. People were buying into the business based on that valuation. They raised a couple of years later, or I don't know the exact timelines, but they raised later at are significantly lower. And to sell today at that price, that means anyone who bought into the business when it was valued above that has lost money. The sad thing there is, in my eyes, is this is some of Freetrade's most loyal supporters, and it's normal people. You know, they used a platform called Crowdcube, if I remember rightly, which is like it's like a way for you to invest in startups, normal people. I say normal people. What I mean is it's not institutional investors. I'm sure there was institutional money going into this as well. But the thing that concerns me here is that there's a lot of this was pushed heavily by Freetrade to their customer base to invest in this business, and now they've exited at a valuation that's significantly lower than a lot of the points they raised at. It goes deeper than that because there's been dilution. So they've increased the amount of shares, so they've diluted down the ownership of those people, so they're going to get even less potentially, and they gave preferential rates to more serious investors. So they really have dicked around the retail investor here, the fan who's bought in.
Remember, there was a lot of growth for Freetrade back in 2021 when the stock market exuberance was going on, and then that growth completely came to a halt in 2022 during all the interest rate rises. So at various points, to be honest, I've been a bit nervous that I was going to get anything out of this. So the fact that there has been this trade sale and I'm personally in a decent profit means that I'm okay. So if you were one of the Crowdcube investors that invested in the last two raises for Freetrade on Crowdcube, you lost out. So they're extremely disappointed. And I've only scanned the forum very quickly this morning, but they're very, very unhappy. And I guess I sort of share that disappointment in a way. There were two institutional rounds, I think. One from a VC company called Draper Esprit, now Molten, and the second from another company whose name I can't remember. The second institutional raise gave an exit opportunity to existing Freetrade shareholders such as myself, and I had the ability to sell my shares around that time for just over £3 per share. And that would have, obviously, had I done that, I would have been twice as well off, 2.5 times as well off as I would compared to today, and 3 years of time have passed since then, or nearly 4 years. In terms of a decision, obviously I made the wrong decision by not selling then, and as did, others. However, the interesting thing, I mean, this does mean that institution has lost money potentially as well. Someone in recent weeks on the Freetrade forum was saying that actually these institutions that had bought in, and this is a pretty classic move from VCs and PE firms with these kind of companies, but they had gotten better quality shares than us sort of mugs on Crowdcube, and this may have entitled them to more of a share of equity over time, even if the business has not kind of performed so well. If this is true, this is the second time a Crowdcube company has sort of done this. The other one being Brewdog, who had this big PE company come in and buy a load of the shares, and they've got a much better deal. And on a personal level, my kind of final take home from this is that, something that I had been increasingly realizing in recent years, but I'm totally solid on now, is that, investing on Crowdcube is like a nice hobby, but it's just, it's just not a serious investment platform. Like, it's not a serious way for people to actually make money. You're so much better off sticking to, publicly traded companies for so many very obvious reasons. So most of the comments on the forum seem to be kind of centered around that, discrepancy as you posted between the different share types. Some of the other people can take solace in the fact that I think the institutions have lost out as well. So it's not just the crowdfunding investors, but clearly they haven't lost out as badly as people who got in on the most recent round. I think the thing that's probably quite disappointing here is, well, as I say, this is like the second company I've been involved in where this has happened, and both were a similar situation where you had like lofty valuations that were bought into even by institutions that were buying into those big valuations, and then the onward progress of the business, it hasn't lived up to those expectations. And, had there been any opportunity to spot this, and there might have been during our exit opportunity in 2021, this would have been a very kind of the small print afterthought thing that very few people would have paid attention to, and even fewer would probably have understood the significance of it. The other point I think you made, referring to like people as like fans of Freetrade, which is true. And I think that like the Crowdcube kind of focus is a way, even more so for businesses like this, to kind of build up a brand. They build this community. The people like the product, the people invest in the product and the company, they post on the forums, and, they buy the socks, they buy the hoodies, and they sort of, really get into like supporting this company. And when the ultimate sort of end to that is that, you lose 80% of your money and the business does something that you don't want them to do, that's like incredibly disappointing. I think it's just, I mean, I really see how that mentality kind of comes about. And, we're all a bit tribal, and I didn't ever go so far as getting the hoodie, but like you can sort of see how that comes about. I think maybe it's just a reminder that it's just not a healthy thing to have. Like these businesses, they're not, they're not your friends.